Welcome to the Bekaert Tax Beat, a conversation about tax that matters.
Welcome to this edition of the Bekaert Tax Beat podcast. Today's episode is a deeper dive into one small but very important tool for working with the IRS, Form 2848, the Power of Attorney and Declaration of Representative. This form can streamline the flow of taxpayer information to and from the Internal Revenue Service, theoretically at least. And we'll go into that in more detail. All right, joining us today is our expert, head of our federal tax controversy practice, Ann Oliver.
Hey, Brooks. I am calling in today from sunny Norfolk, Virginia, and excited to talk about the power of attorney because I use it pretty much every single day in my practice.
Also, as always, Sarah.
Hi, Brooks and Ann. This is Sarah calling in from Greenville, South Carolina.
And I'm Brooks Nelson, partner in Richmond, Virginia. All right. So, Sarah, how's life treating you?
Life is good. We're past April 18 deadline this year. And so it's pretty quiet in the office. I think all the tax people are still asleep, recovering from a couple of long weeks, as well as some festivities on Monday evening. But other than that, it's a great day. Another good day to be a tax professional.
Right. And I think our profession is still adjusting to a real deadline. We hadn't had a real true April 15th/18th deadline in 2 or 3 years. So it took a little adjustment, and many of our people had not experienced that. All right. So moving on to the topic of the day, the 2848. Let's just back up a little bit. The IRS is very tight with taxpayer information, and rightfully so. We have all sorts of issues that come into play, not the least of which is ID theft, security, IT security issues. There's statutory provisions that govern the ability to share taxpayer information. The IRS takes it seriously, maybe one may even argue a little too seriously. They are very reluctant to talk to taxpayer representatives without all the proper forms in front of them. Sometimes they're even difficult to talk with the actual taxpayer. And it's, as these issues, and again, cybersecurity type of stuff, as these continue to get worse, I think we see the pressure on the IRS to be even more strict and rigid in this area. So having said that, the IRS sends out tons of bad notices. Sometimes they send out good notices, but regardless, there's a need for communication between the IRS, taxpayers, and the CPAs who represent them. And that's where the Form 2848 comes in. In general, we need to get signed 2848s by the taxpayer and by the CPA/lawyer/enrolled agent who is representing the taxpayer to be able to talk about, receive information, etc. with the IRS. So, Ann, floor is yours. How would you describe the POA/2848 and its value in our practice?
So as I said, this is something that I use almost daily when dealing with clients in the practice that I do, which is tax controversy. So the POA that we're talking about is a very specific power of attorney, the Form 2848 with the IRS. So there's other powers of attorney that people might have heard of. You can get medical ones and other ones for different things in life, but the IRS requires the very specific form if you're going to be using it to discuss taxpayer information. So this POA authorizes an individual to represent a taxpayer before the IRS. And it also authorizes them to receive confidential tax information from the IRS. So those are sort of the two main purposes of the POA. So when we think about representing a taxpayer before the IRS for things that you would need a power of attorney for, that would be stuff like communicating with the IRS on behalf of a taxpayer. If you're talking about the taxpayer's rights or maybe a liability of theirs for, that they received a notice for, anything dealing with the laws and regulations that are administered by the IRS. And then it also means representing a taxpayer, what used to be physically, now is more virtually, in front of the IRS, whether you're at a conference like for appeals, a hearing, a meeting, an exam, something like that. So when we are representing ourselves in front of the IRS for purposes of a client, we need a power of attorney that's signed by the client that authorizes us to do that. And then receiving the confidential tax information, that would be, if you wanted to get an account transcript from the IRS, call and ask some questions and discuss something on the client's account, get a copy of correspondence, information from the tax return, stuff like that. So, I think it's pretty clear that anytime we need to talk to the IRS about anything for one of our clients, we need to get a power of attorney in order to be able to have that conversation.
But there's this little box at the bottom of my 1040, which I signed and said, hey, IRS, you can talk about this tax return with my CPA who signed on my behalf. I checked the box right there. Why isn't that good enough?
That's true. So you can do that, and that will authorize the CPA that signed your 1040 to be able to talk to the IRS about, 1040, 1120, that tax return, about that tax return. So I'm a lawyer, so I'm useless when it comes to that because I'm not on the tax return and didn't prepare it. So I wouldn't be able to call. Also, somebody else who wasn't on the return wouldn't be able to call. And more importantly, I would say at least half the time that I end up calling, the issue is much bigger than the one thing we might think it is. Right. So if you authorize someone on the bottom of your 1040 to talk to the IRS about that particular year, but the issue is, well, I haven't got my refund, where did it go? And the problem is you had an overpayment for that year, but it got applied to some other liability. Let's say a civil penalty or something that you had assessed. That's not you're not going to be covered for the civil penalty. So you'll call the IRS and they can say, yep, I can look at the 1040. We can talk about that. Yep, there was an overpayment. I can't tell you what happened to it. And so it's such a limited, there's the scope of that authorization is so much more limited than the scope of a power of attorney, which can cover multiple years, multiple kinds of forms, and can include multiple people. So that's not a completely useless tool, but and like I said, wouldn't cover an attorney. So I wouldn't be able to use it. So the powers of attorney are so much more broad and so much more helpful when dealing with the IRS.
We were talking about this form, there's a checkbox on the tax return, but this form 2848 is filed completely separately and may or may not be filed in usual ways.
That's right. So the power of attorney is not filed like a tax return. It does not go to the same group. So there's a couple different things you can do when you get a power of attorney. So if we go back in time, the original method was a paper document that was signed in ink by the taxpayer and by the representatives, and you would then mail it to the IRS. So that hard copy method is still available where everybody signs it in ink. But in addition to mailing it, you can also fax it over to the IRS's centralized authorization file or CAF unit, or you can upload that ink signed power of attorney into a portal to the CAF unit. And no matter whether you mail it, fax it, or upload it to the portal, they're all processed first come, first serve. So whenever it comes off, either out of the envelope or off the fax machine or printed through the portal, it's going to be processed in the same order. During COVID, the IRS did create a method for accepting electronic signatures, realizing that many people, including taxpayers, were at home and not necessarily in their offices and didn't necessarily have access to a scanner and or a fax machine and such. And so they did create a method for electronically signing a power of attorney. And if you have one of those, it has to be uploaded to the portal. It cannot be faxed. It cannot be mailed. So once it's uploaded, again, it just goes in the pile with, all the other ones that came in through the door or through the fax machine, and it'll get processed by the CAF unit as a power of attorney. The problem with that one is the CAF unit has been really, really backed up. They used to process about 3 to 5 days from the time they received a power of attorney. And in the last 2 years has just been far, far, far beyond that. So the electronic one is easy to submit, but then you have to wait until they process it. Then the last method is what the IRS came up with recently. It's called a Tax Pro account. So this is wholly electronic. It's electronic on the taxpayer side, and it's electronic on the representative side. So everybody needs to have an electronic account with the IRS. It's called an e-services account. The representative would create a request for authorization, which would then get sent to the taxpayer, and the taxpayer would open their e-services account and they would authorize the request from the representative. And then that effectively would create, within 2 days, is what how long the IRS says it will take to process, will create effectively a power of attorney, even though neither party ever actually signed a Form 2848. But there are some downsides to this new system, and it only works for individual taxpayers. So for all of our clients who are entities, corporations, partnerships, all of that, we can't use it. And they also have to have an address in the United States. So it doesn't work for any foreign taxpayers. And it can only be used for a few issues like the Form 1040. So it's not as broad in scope as a power of attorney is.
So, and I have two follow-up questions. The first one is, from the taxpayer perspective, who is signing? Because we seem to trip up over that all the time. So specifically when we're talking about joint returns or kids returns, who's signing? And when we're talking about entities, who's got to sign these power of attorneys?
Yeah, so if you have a joint return, both the husband and the wife need to have separate powers of attorney. So each individual that signed the 1040, if they filed jointly, has to have their own power of attorney signed by them. So the representatives are then going to have to sign twice, each power of attorney once. For children, you need to have someone who can sign on their behalf, whether that's a parent or a legal guardian if they're under 18. And for entities, this is where it gets super fun, especially when you have LLCs, right, which can be taxed as partnerships or corporations. So corporations are the easiest, whether you're a C Corp or an S Corp. It has to be signed by an officer that has the legal authority to bind the corporation. So generally speaking, that's going to be somebody with a title like president, vice president, treasurer, CEO, CFO, something along those lines, like a typical officer title. For a partnership, it's got to be a partner that's authorized to act in the name of the partnership. Usually with partnerships, I think of, well, who can sign the 1065? Who's signing the partnership tax return? Now, we'll caveat the partnership one a little bit to say that if what we're talking about is the actual 1065, the original partnership return, that power of attorney has to be signed by a partner. If the partnership is under exam, then we have this partnership representative who has sprung to life that represents the partnership in an exam, or if the partnership is filing an AAR, which is like an amended partnership return. So then it needs to be signed by the partnership representative. So for partnerships, you have to figure out, what is the purpose of this power of attorney? What am I doing with it? And then figure out if you need a partner or the partnership representative to file. And then, pretty much for other ones, again, S Corps or officers, LLCs, you just have to figure out, how is it taxed? If it's an LLC, is it taxed as a partnership? Then you follow the partnership rules. If it's taxed as a corporation, you follow the corporation rules. And there's a couple of other little ones with trusts and estates and all that, but all of it is in the instructions, actually, which are relatively helpful for the Form 2848. The IRS gives pretty good explanations in terms of who files for which kind of a taxpayer.
Although, I don't think we can dive into this, but I mean, there's certainly lots of quirks when you have a business that's been purchased and or you get into divorce situations. So there is some messiness on who's got to sign. You definitely need to check with your CPA or with Ann when you get into that stuff. All right, my other one's an easier question. What method are we using the most these days to get the POA signed?
So I am still a fan of the old school method with an actual Form 2848 that we print out and then everybody signs in ink. This, of course, does require us to then send it over to the CAF unit. But the key with this one is it allows you, if you have an ink signed power of attorney, not an electronically signed one, but an ink signed one, if I call the IRS to discuss an issue, I can fax that power of attorney over to the representative while we are on the phone. They will receive the fax, open it up, authenticate it, and we can talk immediately. So it doesn't have to be on file with the CAF unit. Now, if it is, and the CAF unit has processed it, that's great. We skip that step. They pull it up. They see I'm on file, and we just start talking about the issue. But you can't fax an electronic one over to a representative. So there you're at the mercy of the CAF unit. You've got to wait until that power of attorney gets on file. And the IRS will tell you if there's a problem with your power of attorney, but they will not tell you if there isn't a problem. So you don't really know for sure when your power of attorney has been put on file. So when I call, I always have the power of attorney ready to go. Also, because it contains all the information you need to be able to have the phone call, which is the EIN, the name, the address, the forms you're authorized for, the years you're authorized for, everything. It's all in one place. And if I need to, I can fax it over. If it's on file, I don't, but then I can answer all the initial questions because all the information is in one place. So I still go with the old school hard copy. I do scan them in and keep them electronic so that I can fax it in my system, but I still like the old hard copy where everybody signs it because it is by far the easiest way to be able to get through to the IRS the fastest.
So, Ann, what's the advantage to having a POA for a taxpayer? What does it give you access to that you wouldn't have otherwise?
So if I've got a power of attorney either on file or if I send it over at the time that I call because I haven't called before or the CAF unit hasn't put it on file yet, I can request account transcripts for a taxpayer and the IRS will send them to my eServices account. I can talk to the representative and just say, what is happening here? Why hasn't my client gotten their refund, for example? What's going on with the account? If you check the box on the power of attorney, I will get copies of correspondence that's sent to the taxpayer. So for some of our clients, that's really helpful because depending on which address they use for their return and where their mail goes, it doesn't always necessarily end up in the right place. So if we get a copy of the correspondence, we are then immediately alerted to whatever issues there are going on with the IRS, and then it gives us the chance to be able to handle things right off the bat. And then finally, a big one is I can represent a client during an exam or if we're at the appeals level. And that gives me the ability to talk directly with either the revenue agent or the appeals officer.
So the account transcripts, those are for posted and closed transactions or processed and posted transactions. What else is, what will an account transcript tell you that you didn't know already?
Yeah, so account transcripts, like you said, it's everything that's been posted. So if something is pending, it won't show up yet, but for everything that's actually processed, it's on there. And so you can see everything. You can confirm the dates that all returns were filed, which is really important a lot of times if you're filing amended returns, because you need to figure out when the refund statute started to run and make sure you're within the 3-year period. And sometimes the dates returns were filed wasn't always the exact extended due date. It might have been a couple of days before. You can confirm the dates and the amounts of all payments that were made on the account. And we use that a lot because sometimes, especially when you have different people for the client making payments, they can end up in the wrong area. You have a lot of our clients, for example, if you had a corporation, they would have corporate income tax on the Form 1120. They probably have payroll taxes for the Form 941. They would have unemployment taxes for the Form 940. And then there's a couple of other forms where they could have payments too. And sometimes payments end up on the wrong account because the person making it maybe just chose the wrong option or the IRS put it in the wrong place. And when you get an account transcript, you can see exactly what is where, when was the payment made and how much is it and which account is it on. You can see penalties that have been assessed, if the penalties have been paid or abated, and then you can see if there's any overpayments that might have been applied somewhere else. And I alluded to that earlier where a client says that they were expecting a refund. We look and there was an overpayment, but we can see on the account transcript that rather than being refunded, it got applied to a different account. And then that answers the question of where did my refund go?
And when you say a different account, meaning a different tax under this same taxpayer, not like applied to your cousin's account or the company down the street's account.
Right, exactly. So for the most part, a payment is going to remain with the EIN, whether it's a social security number or an employee identification number, is going to remain with that number wherever it was paid. So it might have been applied. For example, a corporation has an overpayment on their 1120, their federal income tax form, but then they had a liability on their 941, which was their employee taxes. And then the overpayment went from the 1120 to the 941, but it would still be with the same taxpayer, same EIN, same entity. But that happens sometimes where they're just unaware that there's a liability somewhere. And this will tell us exactly which one it went from, which is why, again, the powers of attorney are so much more broad than just checking the box on the tax return itself, because this allows me to see all of the accounts for that particular client and all of the things that they file and figure out exactly what's going on where.
Good. Are there any actions or information that are not covered by a POA, Form 2848?
Yeah, so you don't need a power of attorney to give the IRS any information. So I said earlier that one of the things the power of attorney does is allows you to receive information. So if you want to have the IRS talk to you, you need one. But if you want to talk to the IRS, you don't need a power of attorney. So if you're going to submit, for example, a letter on behalf of a taxpayer, you don't need to have a power of attorney on file to do so. They won't respond to you specifically, whoever sent the letter. If you don't have a power of attorney on file, they'll contact the taxpayer directly. But you could submit something on behalf of a client. You can also call and request a collection hold without a power of attorney, or even request first-time abatement of a penalty. The IRS will not tell you whether or not they have accepted your request. They won't tell you whether or not the collection hold is good and for how long, or whether or not the penalty actually will be abated under first time abate. So you would need a power of attorney to confirm, but you can request those. And I have done that before, where we're sort of in an emergency situation. Maybe we're on the last day of a notice and we just need to get something. We just need to call the IRS and try and get something to happen. And for whatever reason, maybe none of the officers are available that day. We can't get the power of attorney signed. So a few times I have called, requested something, and then the next week or so, when I get the power of attorney, call back and find out whether or not that happened. And follow up then. And then I mentioned above, filing returns, providing clients with tax advice. There's some things that don't constitute practice before or they do constitute practice before the IRS, but you don't need a power of attorney for them. And then there's a couple things that you need a power of attorney for, but it won't get recorded. And those are super fun. And that is actually where the electronic system and the update of the uploading of the electronic signatures is going to fail. So for example, with a private letter ruling request, you need a power of attorney for it, but there's no module that they can put it on. So it doesn't, every single time you call, you would have to send it in. The form 8832, where you change entity classifications, that's the same thing. There's nowhere for the power of attorney to land. And so every time you call, you have to resubmit the power of attorney. So there's some quirks, but for the most part, I would say 90% of what I do is covered by a power of attorney, and then I need a power of attorney to do it, and it'll get on file eventually.
All right, Ann, so let's talk about the back end of the POA. You've had a notice, you've had an exam, and you've gotten the POA signed. What happens when the issue is resolved? And let's follow that up as take it one step further. What happens when all that's resolved? And let's just say the client changes firms, or the taxpayer representative changes firms later down the road. So
the power of attorney is going to stay on file for the years and the periods that are the years and the forms that are listed on it forever, unless it's revoked, which either the taxpayer or the representative can do. You can send in a copy of the power of attorney that just has revoked or withdrawn written across it, and the IRS will revoke it. Or it can be supplanted by a new power of attorney. So sometimes when we file them, there will be, let's say, for example, the client had a previous power of attorney for some attorneys that had helped them with an issue. And now we are going to help them with a different tax issue, but they don't want to supplant the previous power of attorney and revoke it for those attorneys. There's a box you can check that says, please keep the prior power of attorney on file and add this one to it. And then you need to attach a copy of the prior one. If you don't do that and you send in a new power of attorney, it will take the place of the prior one. And so whoever was on the previous one will get wiped out. So if a client leaves a firm, or if a representative leaves a firm, there's a couple of options. Like I said, we can send it in and revoke the power of attorney. You could withdraw a particular person. So let's say we had 3 representatives from our firm and one of them left. We could withdraw just the single representative who left, but leave the power of attorney in place for the other 2 representatives who are still there. And, or like I said, we could do the entire thing. Otherwise, though, you'll just keep getting notices. So if there's an issue for the client for a year that's covered by the power of attorney, even though you've resolved, let's say, for example, the issue on 2020, but you could do a power of attorney for 3 years down the road. So today we could do a power of attorney through 2025. Even though, today there's no issue on 2025, but in 2027, there may be an issue on 2025 and we could receive a notice. And so you can either sort of, when you are done with something, revoke all the POAs, or the client could, or you could leave them on file. And then if you receive a notice or something pops up, go back to the client and inform them, this is what's going on. If they've left the firm and you don't have a way to contact them, then it's probably time to revoke your power of attorney. And you can do that individually. You can also submit a FOIA request, and the IRS sends you a big spreadsheet that lists every single EIN, period, and type of tax return you are authorized for. You strike through the ones you want to keep, and then they will remove all the ones that are outstanding. And that's probably a good idea to do, especially if you leave a firm, but even otherwise, maybe every couple of years. Just keep it up to date. So you're not getting notices for clients that you don't have any way to alert, that something's going on.
All right. I think that brings our discussion to an end here. Let's go to final comments. Ann, you got any final words of wisdom on this topic you'd like to cover?
I would just say, stay patient with my desire to have these things signed in ink. I know it's a pain in the neck, but it is by far the best way to be able to do it. And hopefully fax machine technology will continue to exist even beyond 2022, since the only thing in my entire life I ever use a fax machine for is sending powers of attorney to the IRS. But because I do it all the time, it's incredibly important. So I'm not stuck in the Stone Age in everything in my life, but on this thing, I will remain firmly rooted in 1985.
Nothing like 20th century technology to get us through the day.
All right. How about you, Sarah?
I think the power of attorney doesn't get enough attention in our practices as to the value it brings and the flexibility it provides in being able to have conversations with the IRS and hopefully resolve things once we get an actual person on the other end of the phone line.
All right, and I'll just add, despite what would seem to be some simplicity, there are still a whole lot of nuances and to be, that just falls into the broader scope and scale of IRS controversy. And, foot faults on the 2848 just leads to more and more frustration in the process. So far better to get it done right up front rather than to continue fighting that battle as you go down the road. All right. And with that word, we will end this podcast on the value of the Form 2848 and the power of attorney when working with the IRS. Thank you for listening in. Quick disclaimer that we are not providing tax advice on this podcast. Please consult with your tax advisor, hopefully at Cherry Bekaert, hopefully with Ann Oliver when it deals with tax controversy, with your specific tax issues or to discuss information from today's podcast. Check out the firm's website at cbh.com for the latest guidance and materials on this and other tax and business topics. This concludes today's podcast. Please like, share, and subscribe. Thank you, Ann. Thank you, our listeners, for spending your time with us. We truly appreciate it. Let's call it a day and go forth in peace.